Welcome back. A whole lot happening. Of course, we are waiting the president as he's set to announce that cabinet reshuffle. But let's quickly unpack the decision by the MPC to increase interest rates by 25 basis points and 0.25 percentage points. There I have in studio Tsitsi Hadendi Madika, who is the head of retail Absa Wealth and Investment Management, and Kanti Pai, of course, economist at Nascent Advisory. Folks, thank you so much for your time. That was certainly not expected, right, Tsitsi?
No, definitely not. We were expecting hold, and the market was sitting on 50-50, so a bit of a surprise.
Yeah. Yourself as well?
No, certainly. I'm sad that I actually announced it earlier on. I've been wrong about this. So, no, I mean, I think, and he gave all the reasons. Actually, most people said he wouldn't do anything.
Yeah.
And then right at the end, you know, he just pulled that.
Yeah, because he even said, and he even noted that growth and all the issues South Africa has are mostly systemic, and that, you know, it can't be done through monetary policy alone, but then continues to just hike anyway. Is it, in the context of what things look like now, necessarily a bad decision outside of growth? Let's take growth out of the picture.
I think he introduced a new element of policy that they've been avoiding for a long time, which is we don't look at the rand, we take it as it is. And then he says in the statement, you know, that, you know, they're starting to worry about these permanent shocks. Right? For the longest time, if you ask the Reserve Bank, do you have an outlook on the rand? They would say we have no outlook on the rand, we take it as it is. But this kind of language where he says we are worried about these, you know, consistent shocks that come from the exchange rate, he actually says this is something that we are looking at going forward, right? Because he says we want armor when it actually shocks us. So I think he's introducing a new level of policy making in monetary policy.
Relevant question being put out as well a little bit earlier, whereas the question was, does it remain at 4.5% as the new target band, or is it really between 3 and 6? The rand reacting positively to all this news at around 13 rand 73. Would you say that they are indeed perhaps targeting that 4.5% target, considering the hike now?
Absolutely. So we've seen in the last year, the wording keeps going back to that 4.5, and the fact that it's sticky at 4.7. Already there was an alarm bell in my mind thinking, oh, this is an indication. So I think they've done a fantastic job of bringing in those expectations, and I think the only way to maintain that was to actually hike. So if they didn't hike, the market would then become a bit complacent. So they'd think, oh, okay, so there is a bit of a room. So I think it was very, and also to go in line with what the IMF said. So the IMF talked about South Africa might actually be on the back foot if this didn't happen. So that is very much in line with where global monetary policy is going. But
three people ignored that call. 3 people within the MPC actually ignored that call, and things did improve. I mean, if you look at the inflation outlook, 4.7% average for this year, 5.5 for next year, 5.4 for 2020, and it's going to peak at 5.6% according to their expectations. Things actually improved compared to the last MPC. What are they mitigating against here?
The improvements, though, are volatile improvements. So the rand being better is not a good thing. Tomorrow, the rand could go to 14 or 14.50.
Sure.
Oil is also not something that the MPC can actually do anything about. So the oil price is also one of those that's quite volatile. So it's not improvements that are local factors, and the global factors are still against us. So to be honest, it was probably the right thing to do.
Sure. A tough one, though, considering the circumstances. The rand had gotten better by 3.8%. Break even says, however, that it's going to, for the next 5 years, that is, that it was going to remain above 6%. So they're seeing things actually remaining that far ahead. Clearly, the message here is that we're not looking just right now. We're looking at what's going to happen a lot in future. And
I think that's what he said, you know, because I suppose once you start to slip, it's much harder to actually bring it back.
Yeah.
I mean, then he talks about co-inflation, right? He said, well, co-inflation actually looks really good. But of course, and this is something that actually a lot of people have looked at and say, look, as long as we're looking at co-inflation, all these other volatile
messages here.
So there is a number of things there that are going, you know, back and forth. And I think giving mixed messages can be actually quite harmful to the long-term outlook of monetary policy as a whole, because you want monetary policy to be credible at all times, that you don't get certain messages. I mean, previously he's also talked about his sort of preference for a 3% target.
Yeah.
And so some of these messages are going to catch up with him.
I'm very concerned about, you know, the element of credibility for the South African Reserve Bank as well. March, we cut interest rates. Later in the year now, we hike interest rates. Some would have said that perhaps that cut as well itself was perhaps a little premature. Yes, perhaps we needed it, but it had almost no effect if we're going to say that interest rates take effect over 18-month period. Clearly then it hasn't done much. Is the credibility of the South African Reserve Bank intact with this decision?
Well, I guess when you've got to. You've got to ask the question. It's difficult to say at the moment. I guess we need maybe one or two times where he's speaking. I think we have to actually now listen to the signaling more than anything else. I think also the next MPC member they choose might also tell us something about their background. But I do think this mixed messages, especially around the rand, might be a huge, huge thing for me.
Yeah. Brian Khan leaving clearly means something different. Yeah. Perhaps, considering the last one, where we had a 3-4 split in favor of a hold, we possibly could have held here if Brian Khan had remained in the system.
Absolutely. And I think the governor is trying to make us not guess who voted which way, but the market kind of has a sense, right?
Yeah.
So the market has always known that he's a hawk, and everyone said if it stays like this, the next one, if it's 50-50, it's a hike. And that's what we saw today. I think credibility, for me, does hold, because they're very clear that when one MPC member speaks, they're not speaking for the whole committee. They're speaking for themselves.
Sure.
But when they vote and when they come to market, they do a collective appearance. So for me, credibility is definitely there. And you can see it in inflation and how inflation has come within the band in the last 10 years. So credibility is absolutely there.
What happens then? Petrol now goes down R1.54, and that continues perhaps into January. Right, assuming maybe that the petrol price, the oil price, maintains its trajectory closer towards $60 a barrel. The rand remains stagnant at current levels. Electricity price shocks, yes, they're there, but it's nothing that we aren't expecting, shall we say. What happens then? Do we then cut interest rates again? Do we get to a point where we just remain, pat again, but things have continued to get better?
He addressed it. So in the Q&A, he actually said that they need to think long-term about monetary policy and make sure that for the shocks, potential shocks, that they've done their best. And now they need fiscal policy to do the structural changes. So for what he's saying, in my mind, is no matter what happens now, they've made the decision, it's gone up. Unless something massive happens, we are now there. And the rest needs to be done by fiscal policy. So he's made the foundation for this is why this reason was a good reason.
Yeah.
And going forward, even if things keep improving, that's just giving us more stability.
Domestic outlook is a challenge. Moderating growth of 0.7% for 2018, excuse me, 1.9% for 2019, and 2% flat for 2020. Do you think he took that into consideration?
Well, he did. I mean, he talks about consumer spending being low, credit growth being low. So, and growth.
It won't be low tomorrow. It's Black Friday.
Well, nobody's getting a new low, that's for sure. So he takes that. But I thought somebody said something that was interesting this morning about this 25 basis points increase. And, of course, attracting, foreign capital. We are right there, right in the center of trying to attract as much as we can. And supposedly this would mean something.
So you're saying this is part of President Cyril Ramaphosa's investment drive?
I thought that was interesting in the sense that, they would, perhaps this is helpful in that way, even though he wouldn't say that. He wouldn't say, we are actually working towards the growth thing, right? If he said that, he would probably also be harmful to policy in general. So he wouldn't say it. But perhaps this is also part of the bigger scheme of things.
Did you agree?
I agree, because also if you think about it, the Fed has hiked twice this year, in June and September. They're hiking in December.
Yes.
So that's another thing. Like the interest rate differential is actually growing between South Africa and the US.
We're behind the curve.
We're behind the curve. So if you want to look more attractive to investors, I think this is actually backing the president and what the president is trying to do.
As an emerging market nation, though, we are still surely the better attraction. Surely.
You mustn't be complacent.
No, of course not. Of course not. No, of course not. But considering now that we hike like this, then, does it really make a significantly huge difference to investments, do you think, for South Africa?
The rand is telling you it does. The rand is responding.
Let's take a look at it again, right? So it was at 1373. It continues to tell the message. It remains pat at that level. But 1373 is perhaps not where we could be. Considering what happened in Turkey, considering the things that happened out in Portugal and Brazil and the like, we were a whole lot better even before that. Still undervalued. They said it's undervalued also. Does that always necessarily mean we're going to have the best investments for at least a shortened period of time?
Well, obviously the rand is much bigger than just the interest rate, right? So there are other factors, demand and supply, and global and local factors. But I do think this does go to, again, credibility of our institutions. And I think even the rating agencies will view this positively. So I think that one has
So
to.
you reckon they did a good move, not just, obviously not for our pockets, but for the whole of South Africa?
Well, I mean, I guess on balance, you've got to try and balance out, and it's always a difficult thing.
Yeah.
We've always said that monetary policy has had its worst time over the past, perhaps even 5 years.
Consumers won't be happy.
They won't be happy. They haven't been happy for a very long time. But I think one of the key things is also how we compare ourselves between emerging markets and the developed world.
Yeah.
That is always a mistake to actually stay just on emerging worlds. We are competing. Really, we compete for capital with the developed world as well. So it's always important to obviously keep a strong balance in that. And as of late, we've probably been competing more with the developed world than emerging markets because actually we've been, kicked out of the path.
South Africa, I have to tell you a secret though, that these two did have an interest rate on hold in terms of their decision for this afternoon. But a slight surprise when it comes to our panelists here. The interest rate, they're climbing by 25 basis points, 0.25. They're going up to 6.75. That's for the repo rate, and the prime lending rate at 10.25%. That decision being made by Lisa Jahanyago and the Monetary Policy Committee having been announced not so long ago. That is the interesting element. Now, of course, we are still waiting for President Cyril Ramaphosa to make that announcement as to who he will add to replace Edna Molewa as Environmental Affairs Minister. Of course, she passed away earlier this year. And Malusi Gigaba just last week, having resigned as Home Affairs Minister. We'll get back to that. I was joined, of course, by Titi Hatendi Matiko, who is Head of Retail at Absa Wealth and Investment Management, and Kanti Pai, who is Economist at Mason's Advisory.